PCG Live. Today we're going to take a look at what's happening in the economy and how the rise of those choosing self-employment is actually affecting economic growth, with Ben Chu, economics editor at The Independent, Adam Memon, head of economic research at the Centre for Policy Studies, and Georgios Nikoladis, economic policy advisor at PCG. And remember, you can get involved too. If you have a question for our panel, you can get in touch with us on Twitter. Just use the hashtag PCG Live. Right, Ben, let me start with you then. How does it currently look in terms of the economic landscape?
Well, it's been a long, hard slog, but it looks like the economy has finally got back to where it was in 2008 at the time of the global financial crisis. So that's 6 years after the great meltdowns in the banking sector. The economy has finally reached that level. So that's good news, but obviously it's taken far too long. Growth is set fair, it seems, for the coming couple of years at least. Most economic analysts expect somewhere between 2.5% and 3% this year, dropping off slightly next year, but that's a reasonable pace. So that's all good news. The question is, how sustainable is it all? People are talking about, quite rightly talking about cost of living issues. When are wages going to start turning positive in real terms, i.e. after adjusting for inflation again? Macroeconomists are talking about productivity levels, which is crucial for our future economic well-being as a nation. So there's a lot still to be watched very carefully, but reasonably positive at the moment, I would say.
Adam, what do you think? What about productivity? What about different sectors? Is everyone holding up?
Well, if you look at services, which is the very large part of our economy, that sector seems to have been accelerating in terms of its growth over the last 4 or 5 quarters. So that's something that's clearly very positive. Manufacturing as well in the last quarter grew 1.3%, which is actually a very, very strong number. And if you look at spare capacity within manufacturing compared to other countries, other sectors of the economy as well, there's still a lot of spare capacity there, which suggests that the capacity for quite accelerated growth is also strong. So that's very positive. Productivity, it remains the key weakness in the economy. If you look at all of the other metrics, productivity has still remained really quite poor. In the first quarter, even the number of hours worked was faster than the increase in output. So it suggests that productivity fell again in the first quarter. And you're not really going to see very sustainable long-term growth in real wages without sustainable growth in productivity. So that remains the key weakness. But there are many positive signs across the economy.
On that, just to go back to you, Ben, why do you think productivity, I mean, we can see why, but what's the problem with it? Why is it still not as high as we'd like it to be?
Well, it's a puzzle, is the honest answer. People have been grappling with this question for a number of years now. Obviously, it's a good thing that more people are in work than was expected. But obviously, it's a bad thing that the output levels of those people in work is not what it was before the crash. I think my personal view is that there's a lot of spare capacity in the economy. A lot of those workers, like self-employed people, could do more hours, could produce more output if demand was higher. So I'm relatively hopeful that as demand does increase, productivity will go up with it and will make up some of that lost ground over the past 6 years.
Okay. What do you make of that? Self-employed people could be doing more work if demand was higher.
Well, there is a case that self-employed people work less hours, but there is also strong evidence that suggests that quite the majority of self-employed people are happy with their way of working. We've had 2 separate surveys which point that the vast majority of self-employed people are happy with the way of their work. Plus, without a doubt, this growth of self-employment has helped to keep unemployment at uncharacteristically low levels given the severity and duration of the crisis. So that is a good point.
At the beginning of the programme, I said that we were going to look at how the rise in those choosing self-employment is affecting economic growth, and you could argue that that's one aspect of it. Is there any other way that self-employment and the rise of it is affecting economic growth, perhaps in the way we work, the nature that we work?
Well, it seems that there is a structural change in the labour market. I mean, if you see the trend, it will make sense that now that unemployment is falling down, people will transition to permanent employment, but that is not happening. It seems to be that people are even people that were forced into self-employment might benefit from it, and they seeing it as a long-term viable career choice. So, and given the fact that without this growth in self-employment, output would have plummeted even further, I think that was good for economic growth.
I'm not very quite as positive as Ben on terms of productivity recovering with demand. I think in 2013 output grew 1.7%, but productivity fell. In the first quarter of 2014, output grew 0.8%, which is actually really quite strong, but productivity still fell. I think if productivity was going to recover with demand, you would have seen some signs of that already, but we're really not seeing that yet. I think it's really constrained by more supply-side factors, the consistent weakness in investment, but there are some positive signs there, but things like the structure of economy as well. So we've had very high productivity sectors in finance and manufacturing, and as a portion of the economy, those are now much smaller. So that does suggest that the capacity for future productivity growth is rather constrained.
So you talked about weakness of investment or in investment. What else could the government do to speed up, well, not just growth, I suppose. You're saying growth is reasonable, but productivity?
I think there are a number of things that they can do. So partly it is looking at things like skills and innovation, so continuous education reforms and continuous reforms to make it easier for companies to become innovative and to invest more. But those are really long-term sort of solutions that won't really deliver a sort of rapid increase in productivity now. I think if you look at some shorter-term things, there are probably some elements of deregulation, some elements of simplification of tax rules, which make generally going about doing your business a little bit easier. So those sorts of short-term things that could well have a positive boost.
I would add to that the banking sector. There's a lot of evidence that small firms are still not getting the credit they need, and this is where it's one of the motors of productivity, new entrants and new ways of doing things, and they haven't been well served by our kind of monolithic banking sector. I think there have been some welcome reforms on that in trying to get more finance to SMEs, but I think a lot more could be done to reform the banking sector, sort of breaking up the big banks, making them more focused, giving them inducements to be more focused on smaller companies rather than the kind of relatively complacent attitude which I think they have in big banks at the moment.
Why does there seem to be this, I don't know what it is, a kind of understanding gap between the fact that if you do help businesses to expand and in fact even to exist in the first place, that's job creation in itself, pure and simple?
Well, if you have to sort of look at the way the balance sheets of these large banks like Royal Bank of Scotland, Barclays, etc., these loans to small businesses are a very small part of the balance sheet. They make a lot of their money from big commercial lending, but even more from trading. So really their focus isn't, and obviously mortgage lending as well is a huge part of the way these banks make their profits. It's hard for them to sort of look at small business lending and see that as a profit centre at the moment, and that's really the problem. You need banks which are focused on SME lending, I would argue, in the way that they do in Germany and other parts of the continent.
We talked a little bit about employment or unemployment, 5-year low, according to the latest ONS statistics. Is this a trend that we think is going to continue? And within that, what do we make of the fact that self-employment continues to increase? Adam?
I think it's quite likely to see that trend continue. If you just need to look at vacancies, which has risen quite substantially, I think we're not really since the level since 2008. So you see vacancies rising. It does suggest that the rate of unemployment will continue to fall. If you look at the hiring intentions, it's also very high as well. So that all contributes to quite a positive outlook for employment. But it's not just the numbers of employment as well. So we have had a large increase in total employment, but the employment rate is now 72.7%, which is substantially higher than we've had for a long time, which is a positive thing. I think if you look at self-employment, yes, that's grown quite a lot, but if you look at full-time employees, and that's also increased as well. So it's not just one sector of employment which has improved; it's a large number of them really.
But I think it's quite interesting that if you look at the full-time employees numbers, they're only back up to the peak round about now. If you take that out, if you take self-employment out of the equation, the jobs market does look a hell of a lot less impressive. Now, I agree that some of it is positive. There has been a structural shift. Older people staying in the workforce longer, more people choosing to work part-time. So it's not by no means all negative, the rise in self-employment. But I think I look at those figures and I see some evidence that people are struggling in self-employment. If you look at the average wages of people in self-employment, they seem to be a lot lower than people in full-time employment. For some people that's fine, but for other people that's a problem. And that goes back to the sort of previous question about how will it affect the economy. Well, if people have less money to spend, that's not good for demand, and that has knock-on effects.
I think I would be slightly more positive about self-employment because if you look at the growth in self-employment tend to come from slightly older workers, so people who are 50 to 64 and people who may have retired but decided to stay on and become self-employed. So that suggests that they have a pool of savings already, and they have more experience in the world of work already, and they understand different markets. So if the self-employment was coming from very younger workers, you might say, okay, well that's just because they can't find a job, so they decided to become self-employed. But the fact that it's coming from older workers suggests that there is some planning there, that this is more voluntary, and that I think that is slightly more positive actually.
Georgios, what do you think?
I agree with Adam, and Ben has a good point. There is definitely a minority of self-employed who are involuntarily self-employed, but you have also those lower wages and lower income reflects the fact that there are many, for example, there's been a huge rise in women in self-employment, working mothers who want to work part-time. It fits their lifestyle better, so that would reflect in less hours worked and less wages.
Let's move on and talk about, well, not moving on completely, but talking just a little bit more about self-employment. Do we actually know why people are choosing to become self-employed? We've touched on it a bit. Some people perhaps it's out of necessity, others it just fits in with their life. Georgios, obviously you're aware of people who particularly freelance, why they might be doing it, but what do people who choose to become freelance, choose to become self-employed, what do they overall say about why they're doing it?
Well, it's a combination of factors, the most important of which is that they want to be their own boss, and they want the flexibility of how, what, and where they work. Our members are people with high expertise, high specialization in the field, and they want the flexibility in the way they work. They want to choose which projects they work on, and of course they want to pursue high rates, because freelance workers who are experienced usually command a higher rate than employees. So it's a combination of factors.
And they're not put off by tax issues, shall we say, without going down that avenue, which may take us hours?
Well, tax is a big issue for freelancers in that there's an overcomplicated tax system, and of course one-person businesses do not have the same capacity to deal with them as large businesses. But of course we see many people, hundreds of thousands of people choosing to go into self-employment despite of tax issues and access to finance, which is very limited. So of course it's a trade-off.
I think it's worth making the point that we are reliant overwhelmingly on survey data for these sort of questions you're asking about why people do it and what they're doing, etc. This isn't an area of the workforce which is particularly well covered, I think, by the official national statistics, particularly in terms of pay. We get national pay growth figures from the Office for National Statistics regularly, but it mostly don't include the self-employed. So it's a bit of a we have to surmise about what's going on. So I think this would help if the national statisticians would perhaps pay more attention to this growing part of the workforce, which is now 15% of the workforce, so 4.5 million people. So very important. And going back to that question about how will this affect the economy in future, we really need better data, I would argue, on this, more comprehensive data.
Is that likely? Do you think, are there any conversations that go on about including self-employed people in those kind of statistics?
Yeah, definitely. We've had conversations both with the Bank of England and the ONS, and they're increasingly interested in self-employment because we see how it's suddenly become this hugely important issue and nobody really understands it. So they seem committed to digging further into it. with more data comprehensive.
Now you mentioned the Bank of England. Let's talk about interest rates, because it's one of the issues that seems to be filling the newspapers at the current moment in terms of speculation. Until we've got I mean, in fairness, there's been speculation about when the Bank of England is going to raise interest rates, not if. What's your feeling, Adam, about when it's going to finally happen?
Well, I think that it's changed so often. It's sort of dangerous to give a guess, but I don't think we'll see any rate rises this year. I think probably beginning first half of next year is quite likely to see some gentle rate rises. But I think the interesting thing is that there's now a consensus that the equilibrium rate that they're going to reach is going to be much lower than it was before the crisis. So before the crisis, a 5.5% bank rate would have been fairly normal. Now they're saying 3.5%. So even if we do get to full health, even if the economy is perfectly fine, we're unlikely to see rates as high as we saw before. It's going to be a gradual process. The Bank of England won't want to sort of choke off the economy. They won't want to sort of restrict lending, given we have such structural problems in finance already. A more interesting question is what they do when we see continuous problems within equity markets, within bond markets as well, which are still quite unstable and actually unhealthily addicted to very, very loose monetary policy. So that's a concern, because the Bank of England isn't really, they have set interest rates according to inflation and output, but monetary policy has an impact on financial markets as well.
Why do you think that interest rates won't rise this year?
I think because inflation is actually below target. It's unlikely. There's no real pressure for them to raise rates to reduce inflation. Output has recovered, but it's still after the period of time after the recession has not been so long that you feel confident that everything is going to be fine again. So there'd be concern that raising rates too quickly would reduce lending, reduce investment, and reduce business confidence.
Ben, do you agree with that?
Yes. I mean, ultimately, this is a decision made by the 9-person Monetary Policy Committee of the Bank of England. Mark Carney, the governor, has made it pretty clear that he's on the dovish side. He thinks there's spare capacity in the economy. He doesn't see any particular need to raise rates imminently. He's talked a lot about macroprudential tools to stop particular bubbles arising in the housing market, etc., and said that this is the first port of call to stop those bubbles rather than raising interest rates. So everything in the public speeches he's given implies that he wants to keep rates low for pretty much as long as possible. Other members of the MPC seem to be less signed up to that particular agenda. We had Martin Wheel last week saying that he thinks rates will probably need to rise sooner. Certainly sounds like he thinks they need to rise sooner than that. So it's a question of how that 9-person committee reads the data over the coming 12 months or so, and whether the majority, which it is now for keeping things on hold, will itself hold. So we'll have to, depends on how they see it, I think.
We'll come back to the impact on business of the current economic state of health in just a second, but let's just very quickly talk about the housing market as well, because again, those, apart from interest rates, the housing market is something again that's never out of the papers right now. Is there a feeling that the housing market is overheating, or is it more of a London problem, do you think?
Well, if you look at the national statistics, it certainly does seem to be a kind of two-speed market, with London soaring away about 70% annually, and then the rest of the UK around about 8%, but parts of the UK, really below 5%. So it's difficult to say. I mean, my personal view on housing is that there's a huge supply problem, and this is one of the reasons why prices are so high and still rising, is because supply isn't meeting demand. Therefore, prices can there's always going to be support for prices. The London market's obviously influenced by foreign cash buyers pushing up the price of prime properties. So I personally don't see a particular bubble problem, although I think that housing generally is far too expensive. That's a slightly different point, though. So yes, I would be minded to say that people shouldn't get too panicked, despite the fact that the average house price to average incomes is pretty stretched historically.
Yeah. Adam, what about you? Do you think there's a problem with the housing market in the UK?
Well, there's definitely the major problem is supply. I think, as Ben mentioned, we're really not building as many houses as we need to, and part of that is there is still problems with the planning system. There is perhaps not really been quite as we haven't really seen the levels of new starts that we'd like to see. Actually, it's increased since last year, so starts are 31% higher now than they were last year. So that's an improvement, and that's something to be encouraged and welcome. But there is, as long as we're not really building as many houses as to fill the size of the population, we're really only going to see prices move in one way.
Let's go back then and talk about the general outlook then for businesses. We've gone through pretty much all the different parts of the economy, growth, productivity, inflation, interest rates, even the housing market. How would you say the current economic outlook is affecting business? Is it affecting it in a positive way or a negative way? Is it a mixture of both?
I think the reason why we had a recovery was a consumer-led recovery. Consumer confidence came back and people started spending more, and that had a beneficial effect on businesses. So I think if that continues, we should see businesses, their outlook and their bottom lines improving, should see them investing more, which will help kind of beneficial circle effect take place.
What's stopping them from investing more?
Well, this is one of the puzzles. We've talked about the productivity puzzle, the self-employment puzzle. This is another one. I mean, why are businesses sitting on ostensibly large piles of cash and not putting it to work?
They don't have confidence, clearly.
Yeah, well, that is one explanation, is that business investment always follows an uptick in consumer confidence. Businesses aren't going to go out and spend unless they see there's going to be demand for what they produce. There may be some truth in that, but other people say that there's a bigger long-term structural problem in that companies just aren't investing as much as they used to. Now, is this because the shape of our economy is changing and investing in factories and all these other kind of traditional forms of business investment is no longer so necessary, so it's not showing up in the official statistics? Or is it, as some people believe, that it's the way that managers are paid? They're paid for short-term share price performance, therefore investing in plant and material, etc., pushes down profits for a period, and therefore they don't get paid as much. You can have a debate about that if you like, but again, it's one that people can argue back and forth with and never reach a conclusion with them, I'm afraid.
Yes. Adam?
I think to some extent I would agree, but actually there have been quite a few surveys showing business confidence rising, so you might expect that to feed into stronger investment. But I think the long-term problem, as Ben mentioned, is, well, one other long-term problem is research and development spending. So the UK has not really been doing quite as well in that as our competitors in France and Germany. So across the European Union, they have a target for 3% of GDP to reach research and development. But in the UK, we're struggling on about 1.7%, and it's not actually significantly increased. And research and development, a lot of economists will agree that it does lead to high levels of innovation, and this specifically improves productivity and improves growth. And if we're not increasing R&D as much as other countries, then our productivity won't grow as fast as theirs as well.
Georgios, the current economic outlook, what is the impact or what is the effect that it is having on freelancers?
Well, freelancers are a sort of microcosm of the general picture. So we've seen stronger demand for freelancers as business investment has picked up this year quite strongly. Businesses calling freelancers to manage the risk of expansion. So we've seen quite the optimism among freelancers. Our own survey data show that over 70% of freelancers think the economy will improve and are optimistic about the business prospects. And it seems that the benefits of the recovery have not yet trickled down to one-person businesses, but it appears to be forthcoming.
And what is it that they would want in terms of economic growth, good news for the economy? What's the single thing that they would like to see that would affect them if we're talking about one-person businesses?
Well, it's obviously demand and rates. So the higher the demand, and we've seen a pattern of high vacancies combined with skill shortages. This is good for freelancers because they're highly skilled, specialized people that can come in and fill the skills shortages. So stronger demand pushes up the rates, and that's good for freelancers.
What then, if you had to predict, well, don't worry, we won't hold you to any of these predictions. If you had to predict the economic outlook in a year's time and perhaps in 5 years' time, where would you put that economic outlook, Adam?
I think we're likely to see another year of quite positive growth. It's quite likely to see employment growing and unemployment falling. It's quite likely to see inflation remain relatively sanguine unless there are sort of massive exogenous shocks. But I think it will probably have another relatively positive year, actually. The key question is what happens to productivity. If that remains weak or stagnant, then that sort of raises concerns about what happens in 5 or 10 years. But certainly for the next year, quite likely to see another relatively good year.
Okay, Ben?
Yes, I think I'd largely agree with that. As I said before, I'm relatively optimistic about productivity, and so I think that will respond well as long as demand keeps going. I do worry slightly about the balance of the recovery still. It does seem to be particularly consumer-driven. Business investment has picked up, but still it's sort of zigzagged for the past 4 or 5 years. So we need to wait a little longer before declaring victory on that front. Net trade, really doing nothing for the economy in any of the official forecasts. When you look at the state of the Eurozone, you can't really quibble with that. But again, it's not great for the rebalancing of the economy when we really need manufacturing and the march of the makers, and one of our biggest markets is kind of sort of bumping along the bottom. So yes, I think the glass is probably half full for me. But again, I'd be very wary about forecasting anything about the economy, given how many puzzles and shocks it's thrown up over the past 5 or 6 years.
Here's a different question then. Are you surprised where we stand today in terms of the economy if you think back to 2008, 2009?
Oh, well, it's not just 2008, 2009. This time last year, very few people expected us to be growing at the rate we were. It was very difficult to see where demand was going to come from. As it was, as I mentioned before, consumers kind of loosened their wallets and there was a positive sentiment shock. So yes, I'm absolutely surprised. I didn't see it coming. I'll fully admit that.
You're not the only one, I don't think. Adam, did you see it coming?
I didn't see it coming, no. But I think it would be interesting to look back at 2012 and throughout 2013 as well, and seeing that was, the forecasts have changed quite significantly from the OBR and Bank of England, even from just a year ago. So the growth throughout 2013 and so far in 2014 has been very welcome and very positive, and I think it took everyone by surprise.
And do you think it was largely down to consumer spending, or was there something else? Maybe just a kind of fatigue, perhaps, with being a not very good, not very well performing economy, and just a kind of degree of confidence maybe coming out.
Well, definitely seeing an increase in consumer confidence. Definitely seeing households feeling a little bit better about their own personal finances. Nominal wages are starting to rise. Definitely the employment market must be part of that. I think a sort of stronger household sort of housing market as well has helped that as well. I think there have been some reforms on the macro level as well, which reducing the corporation tax, increasing personal allowance, these sort of things, which have added either to consumers being a little bit more confident, and businesses feeling that the returns to investment are stronger as well.
Okay, well, thank you very much. Thank you to all of you. That is all we have time for today. Thank you for watching. Thank you to our panellists, to Ben Chu, Adam Memon, and Georgios Nikoladis. Join us for the next PCG Live at the end of the month, where we'll be looking at how banks can offer more support for small businesses and how the upcoming elections may affect economic growth. Until then, goodbye.